Hello, I'm Rocky. This is the Rocky Outcrop. We're going to take a look at GameStop technical analysis. This is, of course, one of our favorite stocks. And have obviously bought the t shirt and I've bought the stock as well. And what I wanted to see happen here is this thing rise up and find some support today. But I have to acknowledge it is what it is until it is what it isn't. Folks, GameStop has been in a downtrend since we look back to the highs that it put in November. This correlates with what we've seen in places like NASDAQ and SPY. And in a sense, I feel like this is more closely related to the NASDAQ pricing than it is to SPY. If you're looking for correlation with some sort of index, check out the NQ1s or something. Anyway, there's a few points I want to make with regards to the GameStop pricing, and this should help you if you're looking to keep some dry powder so that you can buy at discounted prices. Well, hey, excellent, good value if you like the sound of that. Hit the like button. It should also help you if you're looking for where the next upside targets are coming in at and what prices we would need to see GameStop go past to start to really think, yes, we're getting our teeth into some positive price action and starting to climb our way back up and out of this. I've got a couple of things up on the charts. I know already it's a bit of a mess, right? But I've got a few things I want to show you. For instance, these two yellow lines here, they are Fibonacci extensions. I've got a downward sloping blue line here with some writing on top of it. You can see that. That's something I want to point out as well. And I've also got this kind of blue thing here, which is meant to be like a ladder. I've got a couple other lines, and we can go through some of this. And I've got a couple of moving averages up on the screen as well at the same time. Let's do this then, folks. Thanks so much for joining me. I really do appreciate it. If you share my videos with people in the rest of the GameStop community, then it'd be appreciated, right? Because I do actually really support GameStop. Ryan Cohen, the apes. I've got the T-shirt. I freaking love what's going on there with a company which last quarter spent $300 million on increasing its stock, and that's led to questions recently in the run up to the earnings, which are coming out just this month, with questions as to did that affect the earnings per share, etc., and how can we look to the next quarter, and what did it mean when the company did that? Little kind of questions, because $300 million was an awful lot to spend on inventory, and it's something that's worth discussing. So those are the things that we'll finish off this clip with. I'm going to start off with the TA, and I really do appreciate you joining me for this, like I said. Okay, so what I'm going to do really first off is I'm just going to clear off all of the drawings so we can see what this looks like fresh without anything, and just show people I'm actually using the logarithmic chart. It's what I prefer to use. This is what it looks like on a linear chart. So if you're looking at GameStop right now, you might be more familiar with this type of chart, and then in general, this as the bigger picture. For me, I use the logarithmic chart, and this is more like what mine looks like, okay? But it's not massively, majorly necessarily going to be the thing that changes your just that one button. It's going to thing that change your TA alone. We're going to add in a whole series of things. But what we're going to start with is an acknowledgement here that on the daily time frame there was a death cross, and this is a signifier of trend, and this obviously means it's a negative one. And we can also see that we've also come in here and tested off of the 50 simple moving average just up there when after the cross. Now, for brand new traders and hodlers of GME, that might not mean anything, but for experienced traders, etc., they'll know that following on from a death cross, you often see a retest. Then you actually anticipate and look for that retest, that 50. Now, bear that in mind, folks, because this will become important again when we get back around to talking about this in the near future, which is why I'm bringing it up and pointing it out now. But I'm pointing out now, ostensibly under the format I was telling you, where what's happened with the prices, and reinforcing the idea that this is a negative trend, which has had a confirmation, a retest of that 50 simple, and has then continued to go lower and put in lower lows subsequent to that happening. So that's very important, and that will also be important for regards to that, keeping your dry powder. Now, I'm going to come up with my own opinions during this as well, hopefully help you as well, but those are just opinions. And what I do as a trader and an investor and hodler and everything else is I use the charts. I try to separate my opinions from what the charts are telling me. So, but I will include mine during this as well. Let's then add some more detail onto the chart, okay? Because we've had a good look at this. It's moving down the way, etc. And we've also analyzed those moving averages. Now, here's all that detail again. but it is labeled, right? And one of the biggest labels for us then is this one on this line. I'm going to move it over. Whoa, that's the wrong one. I'm going to move over this line here so you can actually read what it says. This is the trend line we want to see act as support. You see that? This is a trend line we want to see act as support, and that's where it was. Now let's just kind of look at this in a bit more detail, and I'll zoom on a wee bit. This started up at those November highs. It came down. It was retested again in the 7th of January. It was then looked to be broken, perhaps even here in the February the 9th, but we were asking questions about whether or not we would get a retest. It was indeed retested several times here as well. Or, you know, just at this point, it was retested, not several, it was retested in here on the 24th of February, and then looked to be coming in for another potential retest here. We didn't actually touch it during that time since 24th February, and now we're most certainly touching that. We've come down to this target that we had in mind before because there was a flash on the chart. Now I have my own indicator, the Rocky Outcrop indicator, showed that there was flashes down here at these lower numbers. Not going to go into the detail of that because I actually have to go back to prior price action and zoom into different time frames, but it was there. And we've satisfied a lot of that. So that's good. Now then, this line, this is the line we want to see act as support. What does that mean? Well, it means today we want to see this thing not close below 87.75. So if towards the end of the day we see this resurgence in price bringing us back up to like $90, then you'll know that we're above this downward sloping line. That's pretty cool. And by the way, today's date is the 14th of March 2022, Monday, and this video will remain relevant. If you just heard me say that and you're watching on Tuesday, Wednesday, it means very relevant because these are the next targets we're looking to over the next few days, etc. Now, if we don't see that happen, what's happening? What's going on? So tomorrow for you Tuesday folks out there, well, you're looking and asking, will we be able to push back up above that? Because we're looking for closes, opens and closes below this line. So tomorrow's price action, we're asking, has it opened up below $87? You know, and is it closing down here and so on. If those things happen, then I have a couple of dry powder, gunpowder targets for you to keep your eye on. This Fibonacci extension and this Fibonacci extension here. Now they come in at $75, or $76, I should say, 76. Call it 76.76 just for the nice number of it. And over here, when Ambo outside. Did you hear it? 66.27. So we could be going to 76 or 66 would be the next two targets that I'm looking to. And if you don't understand Fibonacci extensions, that's fine. I'm just telling people out there who do understand that that's what that is. And for people who don't understand, that's just the next couple of targets, folks, okay? We can look back over to the left and try and find reasons for different ones, but rest assured that if you're looking beyond these two targets at the minute, you are actually looking down to sort of numbers which are much deeper again. So we'll cross those bridges should we come to them. That's the negative side of things. But like I said, right, there's the positive side of things too. And I have a little ladder over here and a kind of a few other little details that I want to point out for us as well. Okay, so this is what this blue thing here is meant to be like a ladder. I was trying to think about it for like a little chap called Timmy who might want to climb up on a ladder. Timmy's ladder. But where are we on Timmy's ladder at the minute? And we're at the very, very bottom. We're at the feet on the ground, you know, lying there on our side, looking up at the ladder, thinking, oh, if I could get the energy together, I'd climb that thing. But right now, not quite there yet. If we do actually want to put our first foot onto the ladder, then we're talking about, of course, getting back up above that 87, sort of into the 90s zone, right? Then where we're looking is to the 94.70 price point. Why? Well, I'll tell you right here. This is actually the 236 fib from the high up here that we experienced on the 16th of February down to the low down here that we experienced on the, well, right now, today. So that's where that 236 fib is coming in at. That's where we need to see the prices getting above. After that, the work starts to really get in hard, right? This is the easy part of the work in a sense to get up here. This is the shallowest retrace. And we can see that when we look at the VPVR, and we can see that the liquidity in etc. in this area has been significantly less, and that there's much less kind of historical reasons to kind of stop us getting up to that 236. But when we get to that number, things kind of kick back in again. And we can see that with our eyes on the charts as well. This is a lot of price action happened. A lot of people who perhaps are looking, who would just get out of a trade at break even, for example, an institution, a new trader, whatever it happens to be, might be in this region just sitting there thinking, took the wrong decision. I'll just get out at break even. You know what I mean? Now that's a real thing, and it's actually, you can see that represented here with this indicator. The next target that we're looking up to, if we're going to look a little bit further, I'm going to just aim up here at the minute towards the 618 golden pocket, because that's where this is coming in at, and that's the start of it. And the text here up to that white line kind of shows you where that kind of goes up to. So we'll be looking up towards these next sort of targets in here towards the $113 area. Now, if for things were to go towards that price, you'd be aware that first off, from where they've been up to that 236, you're looking at a 12% rise in price. Very positive, very healthy sounding, feels good, but it wouldn't be there yet. Moving up towards these other targets then thereafter, you're actually looking at things like a 35% increase in price, and that would be associated with articles on Market Watch and Bazinga and Seeking Alpha and all that sort of crap, and Yahoo Finance and whatever else. That's the sort of time when you start to see that positivity, like great resurgence in this meme stock today, or whatever people want to talk about. So that's what you'd be looking to for those things to happen, and that's kind of where we are right now. So what did I say? What was my opinion? What was my opinion? Well, and my opinion kind of does leak back a little bit back towards this here. In many ways, my opinion is wanting to see where the stock could be heading on a bigger picture. So could we be going down to any of those sort of $50 targets? Could we be going up to our $215 and $350 and $10 million and all the rest of it then thereafter? Could we go in there soon? And one of the first things I want to see, since it's so just around the corner and it's creating a bit of event psychology and a bit of kind of confusion in the markets, is to see this earnings coming in. So regardless, of my opinion for right here today, I am remaining patient on this, and I don't mind seeing the stock price move up 20% or something like that, and think to myself, hey, maybe it's time for me to get in on this now. I don't mind missing out a chunk of that if we're trending up the way. But as you can see here, we're in a downward trend. Now, if we were in an upward trend, then it'd be so good because you could buy any of those highs or lows, and your trend would take you on past them. At the minute, no matter what you do, if you're buying the lows and looking for us to boost up towards the highs, or if you're buying the highs themselves, either way, in the downtrend, you're obviously experiencing that pain. My opinion today, then, for this, just without having looked at any lower time frame stuff or anything, is that I want to see us coming back up here, and trying for that $90 by the end of the day. That's what I want to see. We've got like the volume here with this movement down at this line isn't coming in at being exceedingly high volume. Now, it is high volume relatively right now, given that we're so early into the day, compared to say yesterday, Friday's volume. It's obviously higher than Thursday, Wednesday, Tuesday, but it's not higher than last Monday's volume either. Last Monday was a big drop down as well, and that was coming back down to challenge previous areas, moving beyond one. I'd like to see if there was to be that move, the higher volume, if so it's not right there right now necessarily, although on the 1 hour time frame, like I'm saying, that story remains the case. So for me to kind of fill out my opinion, I'm looking for this to diminish throughout the day. I'll be taking a look at oscillators, and I'll be looking for the momentum which we're seeing here to turn into these white, the pink, kind of the light red bars, and start to shrink off, for that momentum to fade away. Those are the things that I'll be looking for. And if I see those, then my opinion will be, hey, we're starting to see things potentially turn around. As it stands at the minute, while on the 24-hour time frame, just looking there, it's like I want to see us just pull that little bit back up, just that little bit back up. I have to be kind of fully transparent and say that throughout the day, I'd be kind of adjusting my opinion based on this. And right now, as it stands, we're not making it there. We're not getting there. Right now, as it stands, we're not getting there. But as soon as this changes, boom, back on, So some point during the next few hours, I'm looking for this to kind of change. But we're not there as it stands right yet. Now, what else could be jumping out at me? Just as a simple point to make is that if we did see this, and this is where things start to kind of turn into the bigger story for us, if we did see this, of course, turning around from this point here, just looking and saying, well, what's that? It's a tiny little bit of bullish divergence right in the oversold territory at a point when we're coming up towards event psychology of earnings, at an area where we're trying to break out, but we've not seen the follow through on the volume quite yet. Starts to get a sort of tasty feel if we see this momentum slacking off. And what we're seeing is the stochastics. With my, I use an exponential on my stochastics as it happens. By the way, folks, you can use the standard or whatever. The sorry, you can use you could use the standard one. I use an exponential as it happens. The standard, how's the standard stochastic thing looking? Yeah, it's crossed over that as well, of course, right? So cool. So we're looking for this. We're looking for this to get that follow through. You know, we've had a turnaround here in this on the stochastics, but it's obviously in the face of red candles, right? Now the reason for this is because we're above the wicks of the previous hour. So over the period of the next hour, what I'm looking to is saying if the prices remain above 83.60 or 83.50, sorry, 82.50, then and get to push back, remain above that over the period of the next, today, really remain today above that price period, right? Price point. Then great, we are laughing. Days range 83.60. 83.60, yeah. All right, cool. So 83.60. I'm sorry I read that number wrong. It's so far away from me. It's more than an arm's length away. You can see how wee my numbers are on the screen. Then I'm looking for this to get that resurgence. Okay, I'm looking for that to happen if we stay above this, as indicated by the stochastics indicator. Okay, because that's what the stochastics indicator is showing us. That if we stay above this wick, then we're doing okay. That's quite a sophisticated thing, but that's what it's showing us now. But am I there yet with that feeling? Well, no, I'm not. But this point here, this blue line on the DMI, that's where I look for the ADX to turn around. Folks, you've seen me talk about this in the past. It's where I look for this to turn around. Where I look for this to turn around, And so while there isn't divergence, bullish divergence on the DMI over here, there just isn't bullish divergence just here, either on the ADX or on the actual DM negative line itself. We're at the 40 point where we can see things turn around. So this is what I'm looking to here at the minute, and saying these are my feelings, my opinions, right? So those are a good start to that, and thanks to everybody for tuning in so far for this thing. And a couple more minutes here on this episode of GameStop technical analysis. Do please hit like if you haven't hit like already, just as we kind of discussed for a couple of seconds here about the earnings. I've got an estimate of earnings coming in here, 85 cents per share, and that'd be interesting to see, right? That'd be interesting to see. It's going to be interesting to see how we perform relative to the to that estimate. Previous earnings were estimated at 52 cents loss. Reported 139 loss. Over here, we're looking at a positive. So the markets already do anticipate that, following on from the biggest period in the year for GameStop, it's always Black Friday, Christmas, all that these earnings should be good. The previous report that came through when we had the earnings call was talking about how instead of focusing on the share price now, we're looking to try and improve our business and look for long-term growth. I do believe that Matt Furlong, the CEO of GameStop, really does want to cash in on his shares. Now he's getting a share bonus as part of his job worth $16 million. Should the price, where should the price of the shares stay up above $160, right? And we're quite a ways away from that right now, 50% down from it. And it was him that was saying that on there. So I'm thinking Matt Furlong, he's looking at it and he wants to see at least 100% rise up here. I'm looking at it and I'm thinking Ryan Cohen, he wrote a letter to BBBY, and talk is cheap, but it takes money to buy whiskey. And he wrote this letter, and he's hired a lawyer, and he tried to kind of shame Mr. Tritton, the CEO of Bed Bath and Beyond, and the other directors into fixing, if you like, in inverted commas, many of the problems of the company and looking towards better future strategic implementation. And he did that. Like I say, talk is cheap, but it takes money to buy whiskey, or like Ryan says. That was a lot of talk that came from Ryan, right? A lot of talk. And one of the things he said about it is that a compensation package over the period of 2 years of $27 million for a CEO of a company which has got a market cap the size of Bed Bath and Beyond, etc., really ought to be is kind of it's a bit outlandish. Well, let's also say, well, what does Ryan Cohen think is reasonable when the market cap of GameStop is halved since he appointed his own um, uh, CEO of Matt Furlong? And I would say that since Ryan Cohen himself very much knows and tweeted publicly that talk is cheap and it takes money to buy whiskey, that and that he's a savvy and smart individual, that I would say that these earnings are going to be good and that we'll see a resurgence in the stock price, and it will stop kind of having these facets about the kind of the proposition that he made to Bed Bath and Beyond with regards to how their board are acting with their market cap, having seen GameStop's market cap half in the time since his own CEO was appointed. So I think that there's a logical narrative framework there from what I've seen Ryan Cohen, the chairman of the board at GameStop, do over the last wee while, tied together with Matt Furlong's own attitude with regards to the company at a time when the stock prices were at around about his kind of value level. And then he's witnessed them half in price since the last time when on that call himself he says that we're more interested in the long-term value. Again, though, whether or not that actually what we see working out over the period of the next wee while are the things of going up Timmy's ladder over here. And are we going to make it up Timmy's ladder? And if we do, then we've got higher targets in mind, in fact, because there's another rung on the ladder which is missing, which I would like to point out. And that's, of course, the 100% retrace rung on the ladder. And then there's another rung on the ladder, which I'd like to point out, which of course is the 1618 ladder point in the ladder. And just bringing in the final points in the show here when I do this, let me just point out these last couple of things here. This is the 100% area. And what do we see at 100%, right? What do we see up there? A drop off in that VPVR yet again. Let me just bring this up a bit here. And then what do we see at the 1618? What do we see at the 1618? As if by magic, right? As if by magic. As if I'm here deliberately making this stuff look this way in order to make this story. When it's not, ladies and gentlemen. This is the way that this stuff works. And I'm extracting from it the story. Okay? It's not the other way around. And here we can put on the 1618 Fibonacci extension. And you'll notice that earlier on I did talk about how this is a target potential for us, and I can cope with us going there with the long-term potential for the company. I can't. I can understand that the prices could go there. That speculation and everything else, and the would take it there in the face of the belief and performance and activities of the actual company itself, because markets are very much irrational in that sense. However, I can also then, if I'm going to have that there, give myself the opportunity to point out that the 1618 towards the top side comes in at a Matt Furlong distance away of $157, more or less, the 160 or so at what it was whenever he was, of course, appointed and given his bonus. The told about what's in store for him. If we and naturally he wants $16 million as opposed to $8 million. This is naturally, and then we can see that there's this drop off here right there, and it carries us up to $168-69. And when we see prices go to that price point, if I just put in a horizontal line here and scroll over to the left, you can see that this very much takes us back into what would be glorious, positive. Everybody and their mother wants to know what's happening with this stock, because at that point we'll have seen during it that there's a story, and in this story it will include a phase of time in this period right here, which can be said to be the time when GameStop fully changed from GameStop 1.0 to GameStop 2.0. Because it's one thing to have like an IPO and which is what it was like whenever GameStop had the transformation in 21 at the start of the year, when the share prices went from single digits up to $400. That IPO feeling. It's one thing to have that, but that's of course the sentiment and the trajectory changed. Now what we're looking at is delivery. And Ryan Cohen himself as well is somebody who likes to act fast. And with the way that we can see that in terms of how he talks about time in his letters to BBBY, how he thinks too. He's a young man, and but he seems to realize that he isn't going to live forever. So interesting stuff, and that's what that region would really be for us. Okay, so that's where I am right now, and that's a fully comprehensive bit. I hope that you enjoyed it. If you did, maybe you just consider sharing this somewhere else. Shout out to all my friends out there on Superstonk, for instance. If this happened to get shared there, how cool would that be? I'd really love to see some of that. And you know, and the thing about it is we also look at all different stocks. So if you do tune into one of my live shows one day, you might see me looking at cryptocurrency or anything else, but we do this type of passionate full on analysis, and we tend to do it in a way where you get this amount of detail on everything that we look at, which will really set you up for long term success. But as you can see, there's so much to learn. I'm the one here to help you on that journey, but it's not just me. Like I say, you're the rising tide. This is the rocky outcrop that stands above the white rapids of chaos in the markets, where we've pulled ourselves up onto. And you know, thanks folks to being here, and thanks to everybody who's a current subscriber and a Patreon member and everything else. And I'll see you in another clip sometime.